The question that you're asking depends on what your goals are, right? So up front, you should have a game plan. Game plan number one would be to get funded and then make it towards a payout, right? If that's your game plan, and that's probably a smart game plan for maybe anybody who hasn't made it to a prop firm payout yet, or you're at a new firm and you haven't made it to a prop firm payout yet at that firm, I think your goal should be make it to one payout with trading one account, right? It just doesn't make sense to oversize, over leverage, put more risk on the line until you're really comfortable with what you're doing, right? And then put the guardrails up, and then put more risk on the line, right? Well, once you prove concept first. If you're gonna do that, right, the game plan would be to stop yourself at a 20% consistency rule, right? If you have a huge day, it's a tough part of working with consistency rules with prop firms. No doubt about that. Objectively, that's why consistency rules are tough. But if you have a huge day, it really pushes out the point of when you can take a payout, right? If you put up $2,000, for example, now you got to hit $10,000 before you can take a payout. You put up, $3,000, you got to take it to $15,000, right? So unless, you are somebody who just inherently wants to build a bigger buffer and trade larger on the way to a payout, which really doesn't make sense, you want to set that consistency rule.